Heikin Ashi Candlesticks are an offshoot from Japanese candlesticks. Heikin Ashi Candlesticks use the open-close data from the prior period and the open high-low close data from the current period to create a combo candlestick. The resulting candlestick filters out some noise in an effort to better capture the trend. In Japanese, Heikin means average and Ashi means pace. Taken together, Heikin Ashi represents the average pace of prices. Heikin Ashi candlesticks are not used like normal candlesticks. Dozens of bullish or bearish reversal patterns consisting of 1 to 3 candlesticks are not to be found. Instead, these candlesticks can be used to identify trending periods, potential reversal points and classic technical analysis patterns. Interpretation: Heikin Ashi candlesticks are very similar to normal candlesticks, but differ in some key features. A Heikin Ashi candlestick is hollow when the Ha close is above the Ha open. Conversely, Heikin Ashi candlesticks are filled when the Ha close is below the Ha open. This is similar to normal candlesticks, which are filled when the close is below the open and hollow when the close is above the open. While traditional candlestick patterns do not exist with Heikin Ashi candlesticks, chartists can derive valuable information from these charts. A long hollow Heikin Ashi candlestick shows strong buying pressure over a 2-day period. The absence of a lower shadow also reflects strength. A long, filled Heikin Ashi candlestick shows strong selling pressure over a 2-day period. The absence of an upper shadow also reflects selling pressure. Small Heikin Ashi candlesticks or those with long upper and lower shadows show indecision over the last 2 days. This often occurs when one candlestick is filled and the other is hollow. The chart on the screen shows QQQ with Heikin Ashi candlesticks over a 4-month period. The blue arrows show indecisive Heikin Ashi candlesticks that formed with 2 normal candlesticks of opposite color. Indecision can sometimes foreshadow a trend reversal. The red arrows show a strong decline marked by a series of Heikin Ashi candlesticks without upper shadows. This means the Heikin Ashi open marked the high and the remaining data points were lower. The green arrow shows a strong advance marked by a series of Heikin Ashi candlesticks without lower shadows. This means the Heikin Ashi open marked the low and the remaining data points were higher. Doji and spinning tops. As with normal candlesticks, Heikin Ashi doji and spinning tops can be used to foreshadow reversals. A Heikin Ashi doji or Heikin Ashi spinning top looks just the same as a normal doji or spinning top. A doji is a small candlestick with an open and close that are virtually equal. There are small upper and lower shadows to denote little price movement. Spinning tops have small bodies, open-close range, and long upper-lower shadows, high-low range. Despite a lot of movement from high to low, prices finish near their opening point for little change. This shows indecision that can foreshadow a reversal. When using Heikin Ashi candlesticks, a doji or spinning top in a downtrend should not immediately be considered bullish. It just shows indecision within the downtrend. Indecision is the first step to changing direction. Confirmation of a directional change, trend reversal, is required though. Once chartists spot a doji or spinning top in a downtrend, it is time to set a resistance level upon which to base a trend reversal. The example below shows Caterpillar, CAT, with a spinning top forming in late May. The trend is clearly down, so a resistance level is set to define a reversal breakout confirmation. CAT did break this resistance level a few days later, but the breakout failed, a reminder that not all signals are perfect. The downtrend extended and CAT then formed 2 doji in mid-June. A resistance level was marked after the doji and CAT broke resistance to confirm a reversal. Prices extended higher until the stock stalled around 110 in July. 2 doji and an indecisive candlestick formed in mid-July. Also, notice that a clear support level was established. CAT broke support in late July to start a strong downtrend and confirm the trend reversal. A spinning top formed during this downtrend, but there was no upside follow-through or reversal. Confirmation of a trend reversal is important. Classic chart patterns. Classic chart patterns and trend lines can also be used on Heikin-Ashi charts. In contrast to normal candlesticks, Heikin-Ashi candlesticks are more likely to trend with strings of consecutive filled candlesticks and strings of consecutive hollow, white candlesticks. The chart on the screen shows Apache, APA, falling with a string of filled candlesticks in late October. The Heikin-Ashi candlesticks formed a falling wedge and APA broke resistance with a surge in early November. A triangle consolidation then took shape as the stock consolidated in November. The upside breakout signaled a continuation of the bigger uptrend. The next chart shows Monsanto, MON, with a classic correction in June 2011. The Heikin-Ashi candlesticks were more than adequate to identify this correction and subsequent breakout. Notice how a falling channel formed as the stock retraced around 61.80% of the prior decline. The big breakout in late June signaled an end to this correction and resumption of the advance.